Morning, everybody. It's the 23rd of Feb. We are Signal Centre Talking Ball. I'm Joe Neighbour, joined by Ian Coleman and Steve O'Hare. Morning, guys.
Good morning, all.
Morning.
Everybody all right?
Yes, all good. Thank you.
Tune in to Boris yesterday?
No,
Yeah,
I didn't bother.
I did.
All the news was out prior to him actually coming on the air, wasn't it?
Yeah, it was all leaked.
You saved yourself an hour of him waffling away on the TV.
Yeah, but then you would have missed Chris Whitty, so that wouldn't have been good, because for me, he's like one of the people.
Of the show.
Yeah, of course he is. Yeah, he's one of the people that have come out of this whole thing with a lot of what can we call it, intact? Don't know. He's a knight, sir. I think.
Okay.
Knight him.
Cool. Yeah, you reckon?
Yeah. Well, you knight all the bloody footballers. And the boys that go diving all over the pitch.
Yeah, fair enough.
So why not knight him?
Okay, so in terms of the news yesterday, obviously they're talking about the end of the pandemic being in sight now. We've got a roadmap to ease us out of the lockdown restrictions over the next 4 months. Pubs and travel stocks were buoyed on the announcement on Monday. We also are waiting now a plan from the Chancellor of the Exchequer, Rishi Sunak. His budget is due on the 3rd of March, where he's expected to spend billions more on state support for the economy over the next few months. So all looking a bit more positive. Certainly it feels like everything is a bit more positive. Certainly, speaking to friends and family, I don't know if you had the same kind of conversations yesterday with the people close to you guys, but they're all feeling, good that we're going to get out of this and we can start moving on.
Yeah, if it feels like that way. Yeah. No, I don't really speak to anyone apart from you two.
The wife's still complaining about the hairdressers not opening until the whatever it was, another 6 weeks.
Yeah, Tash's phone was going crazy yesterday. All people booking up for their hair.
Oh, really?
Can imagine.
He's really swerved that one. I bet she's been doing it sort of like she's been bootlegging it, hasn't she?
Of course she hasn't. Only with these, me and my son.
Yeah, of course.
On the US side of things, they're beginning their final push for the $1.9 trillion stimulus bill, which I don't know if it's a bit too much, too late, really. I don't know if they're going to need that kind of much.
No, but the banks will probably need it, won't they? To sort of like, they'll probably filter it away somewhere. It'll probably be impossible to get to. So I've sort of like lost confidence in all that. I did see something about HSBC turning to home nations to sort of like support them. They've had a bit of a tough time. I don't know where I saw the headline.
They were reported today, didn't they?
Yeah, was it like massively down 25% or something? I saw whatever it was a really negative headline.
Okay, so look what the shares
we'll have a little
today.
look for it.
Who's that?
HSBC.
Shares are off 1%, had a little bit of a poke up and now heading lower, along with the rest of the markets, to be honest. So maybe a bit of a, well, we'll come on to it shortly, but in terms of economic data today, we had the jobs number out from the UK. That looked pretty decent, actually, with an unexpected 20k fall in claimants and surging average earnings by 4.7% has helped push the pound quite a bit higher today, which I'm sure Ian will come on to shortly. So, yeah, let's move into the charts. I mean, just looking at indices now, they look like they're sort of coming off their best levels and certainly looking at Bitcoin, that's shedding a bit of, shedding quite a lot this morning. And also I saw the Nasdaq notched its longest losing streak in 4 months.
Yeah, gold had a good rally as well, isn't it? Because the US are a bit worried about bond yields, inflation.
Yeah, gold.
Should we throw it over to Steve and he can talk about the charts?
Quickly run through the indices. Mere minor point. How's that?
Yeah.
Okay, we sort of like got indices, bit of an indecisive day yesterday. Really had a bit of a sell-off, and it rallied back. And overnight, we looked like we were heading higher, and it's just gone into reverse gear, which has left us with on the hourly chart, especially in the last hour, we can see this reversal from 66.75, leaving a little topping pattern followed by a shooting star candle. So that's like an evening star doji on its own here. And then this further rejection means we could sort of see further weakness, which we talked about yesterday, really. Seen this in the last hour in DAX, so a bit more follow through on the downside within that. And again, if we talk about weekly charts, which we highlighted yesterday, all looking pretty negative for the DAX as well. I like the Ichimoku cloud, and we've sort of been, price action has been capped over the last few days by that Ichimoku cloud, and it's reacted really nicely. I think we get a break of 13,800 in the DAX, then we could see that them losses accelerate this morning. Okay, DAX, sorry, Dow, the US holding up a lot better than the than Europeans at the moment, but we've still got a bearish engulfing candle, not an outside candle, bearish engulfing candle in the 4-hour chart that closes at 10 o'clock. Nasdaq, though, yes, we drew this head and shoulders formation in yesterday, and this is looking pretty negative. Tried to retest, didn't quite manage it from here. Could say that is a retest there. And then for the measured move target for the Nasdaq is down to 13,000, which seemed a long way off last week, almost 1,000 points in that week. So rings true with what Joe was saying. On the S&P, we're still trying to break the neckline. We've had a poke through, and we've got a bit of congestion here. But for me, that looks prime to follow through today as indices get a little bit of a hiding. On the commodity front, the one sort of like bright light is oil. Although it's not a bright light if you have to buy petrol or use it for heating. It's shining quite brightly for the refiners, the producers, and everyone else. Although I think there's been a bit of a spike up over the last sort of 24 hours. Occidental Petroleum Corp, Diamondback Energy Inc., and a host of smaller Permian-focused US shale producers on Monday forecast lower oil output in the first quarter. This gives the first indications of the freeze that hit last week. Areas of Texas not used to the cold were hit by sub-zero temperatures and record snowfalls last week. So that's had a big impact on the shale. Although we were expecting that output to increase, that hasn't because of the weather. So that's led to a bit more of a further sort of like spike higher in there. What else is causing that? It's really down to that. There's no other headlines around the oil, but levels to watch in there. We can talk about the long-term levels, really. We've talked about this, and it looked like it was rejecting this trend line yesterday. We were sort of trading around here, and then bang, overnight, we've sort of seen the prices come back really strong. We've got levels above in the WTI crude oil coming in at 65.21, and above that we have this high here, 66.53. So that looks like a natural target. We're trading around about the 78.6 Fibonacci, so that'll be form some sort of resistance, but that's quite drawn from a line quite a while ago, so won't be quite as significant as these swing highs here. So yeah, that looks like it's heading higher. I wouldn't stand in the way of oil. Gold as well, really sort of like we keep talking about this bullish flag, or I keep talking about it. I think that will eventually lead to a sustained price move higher, maybe in line with dollar negativity, so in the coming months. But obviously we've seen a nice reversal overnight. You could sort of like see some sort of head and shoulders formation that was forming. We can draw something in a little bit like that, a little bit like this. I said ooh ah. And that's hit the measured move target. So the levels to watch really in gold, obviously 18.15 where we've just stalled. Above that we've got really the sort of like next level 18.55, 1825, 1840, 1855. You can pick a number of sort of resistance levels in gold, but it does look quite promising at the moment. Again, as Ian mentioned, we're talking about treasury yields, the 30-year yield going to 2.2. It was only a short while ago that it broke the 2% level.
Well, she was talking yesterday that they want to get involved in 100-year bonds.
Yeah, they've been talked about before, and I think, to be fair, that seems like the only way out of it. But 100-year bond.
Do you reckon that's affected cryptos then? Because a lot of obviously crypto guys are basically, the reason they're getting involved in cryptos is because they think fiat currencies are going out the window, don't they?
Yeah, I don't think the fact having a 100-year bond will stop that. It'll still be something in the background. It'll have an equivalent value, but if you just look at the value of the dollar, what's the value of the dollar based against? It's based against nothing. It's not based against the gold standard like it used to be. So they can just print and print, and so inflation-wise, that's not a good idea. And maybe it's starting to play out. Yields above 2% for 30-year. You'd sort of never think you'd talk about that, but it's with us to stay. And
so at that point, at what point do people switch out of risk assets if they know they can get a 2.5% yield for pretty much risk-free?
Well, I think that is the point, that, like you say, it is risk-free in comparison to everything else. Although sort of governments do fall eventually, so beware the US.
Well, the US government.
Yeah, why not? Why not? They're sort of like they're not the biggest nation they're sort of getting towards the sort of like China taking over the world, and US will have to sort of say play second fiddle, if not third or fourth. So it could happen.
Since they hold most of their debt as well.
Yeah, exactly. Yeah, I mean, if they sort of
they're wrapping it off on a free 2%, aren't they?
Yeah. So for them, for the US, that they want the dollar to depreciate, really. So they're sort of, the cost to sort of service that debt, it becomes less. But yeah, it's an inflation story, but is it really inflationary out there? I mean, the numbers show it is, but I don't know. We're sort of, it's back on the basis of last year of zero or negative, hugely negative growth, hugely negative everything. So it is sort of like figures we're looking at are still skewed and will be for some time. 2% doesn't seem like a bad number, does it? I mean, I remember when I first bought a house, it was 15%. So,
back in the day,
maybe not the 30-year yield, but the sort of interest rates around then. I still think high interest rates are a thing of the past, and but we'll normalise. Normal levels must be around about this 3-4% level. It's sustainable, but yeah, I don't know, the cryptocurrencies. Although they've had a bit of a pullback, we'll have a quick look at that.
20% in 2 days.
Yeah, I know. I've got to apologise to the Bitcoin fraternity for actually calling it the sell trade idea. And if I'd have normally gone for my sort of normally outlandish prediction, I probably would have nailed it yesterday. But that never expected a reversal like that. So we are having a reversal. We've got a decent topping formations on the daily chart. This candle, a hanging man candle, is very bearish, especially the size of it compared to how we've ground up higher. So this grinding up tells me that 43,000 is within spitting distance, if not less than that, for Bitcoin. But I think we've got to look at more serious retracement levels. 41,700 easy. I think really the main levels to watch on the downside is this 28,000 level in Bitcoin.
That's going to crucify some people, isn't it?
Yeah, it is, and that. But we saw it with the meme stocks, GME stock, and things like that. People will get in at the high. We've broken 50,000. There's some euphoria. This is going to 100,000 because it's a big round number. That's how people look at it. And some people are invested. Obviously from the lows, but the retail probably got in around about 20 to 30 to 40,000, only sort of fractions of Bitcoin, but it's still they'll build up that, and they would have been buying it above 50,000 as well. That's
a lot of them got in when you got the old 50 grand check off the government.
Yeah.
So
Yeah,
was
well, I
that?
mean, funny enough, that what's Bitcoin? 50,000. Oh, we got 50 grand check. That equals one. I can buy one now, and unfortunately, they'll be offside. But that can come a lot further. You know, and it
And still
wouldn't
be bullish.
necessarily, yeah, it wouldn't necessarily be bearish. So that's the concern for people who've sort of bought at the top. It could be a while before we see those levels again. It could retrace quite aggressively, and you know, they could sort of be seeing 50% dips, 70% dips in the value of their crypto. But it is that sort of beast. It's a real unknown. I think it's obviously here to stay and it's here to grow, and you know, but I don't know which one of the 500,000 cryptocurrencies is going to be the one that we all use in
Theta.
a few years' time. Yeah, Theta maybe.
Theta.
Nice plug there. But yeah, so it's see this on the weekly chart. This is incredibly bearish, and we could see even just a normal retracement. We'll see. Let's see if we've not even got to the 38 yet, have we? No, look at that. So 38,000 is a 38% retracement. Again, nice round numbers. So let's target it. Then again to 32,000. For me, around about 25, even down to 17,000. I wouldn't be
You might buy
bearish.
some man there. There you go. That's
Well, it seemed cheap, won't it? But just because it seems cheap doesn't mean it is. It could be cheaper the next day. And you're talking about big percentages when you're talking about cryptocurrency. I better stop talking now.
Thank you, Steve. Ian, what are you seeing on the FX charts?
Oh, it's all a bit boring, isn't it?
Compared to that, yeah.
Yeah, who's bothered about FX?
What, you haven't got a 15-20% swing? What's the matter with you?
No, only on a that Theta, talking about those sort of swings. I was looking at that the other day. It had a 10% swing on a 1 minute candle. That's fucking. That's when your old. Anyway.
Elon Musk typed the word "the"? Everyone thought it was Theta. The next thing I'm going to. Sorry, mistyped.
Yeah, I like that. I suppose we've still got, every so often it's worth talking about the big picture. So I still think we've got 5 waves complete. We've had a prolonged period, this is a weekly chart, of consolidation. And this is basically what we're trying to work out, which is ABC, as it finished. Well, it's actually broken this swing low, which is at 90.03. So as far as wave counts are concerned, it's gone as far as it has to go. 89.70 is prime because 89.70 forms this bad boy. So, but it is starting to move hard this morning, and I suppose you've got to have some sort of break level. I would say if we get through this reverse trend line, which is not far off, then there's a chance that this base could be in place. But I like that. This base could be in place.
Nice.
Yeah. But this is the prime long entry, as I keep on saying. But if we hold this candle, and it's an 8-hour candle, it doesn't close for another 6 hours. That is a morning doji star formation and could potentially highlight the base. So basically what Steve was saying about risk off means dollar higher. So are we there yet or not, is the case may be. Can't be a bit, I wish I could be a bit more precise really. So again, going back to the big picture, this is what we're looking for in euro dollar. Eventually we've got up towards a 161.8% retrace, sorry, 61.8% retracement. Again, it's worth looking at today's close. If we get a decent doji style candle, if we get an engulfing candle, then a top could potentially be in place. If we're looking at the 8-hour chart, it's very likely that we're going to get a bearish outside candle, which again can potentially signal a top. So I think for anybody that's traded the dollar majors at the moment is just to be a little bit patient and see if we break that reverse trend and see what formations we get on these higher time frames on the dollar majors. I was clucking about this on cable. It surpassed it, but it is now looking a bit overstretched. Again, short time frames. We've got a 261.8% extension level here, which is surpassed. Are we going to get a bearish outside candle? We'd need to see a close down around 140.54. And if we look at short time frames, and this is the 1 hour, so we've gone down, shot back up. I think we're going to basically, for cable, probably consolidate in this sort of range, and I'd look for a head and shoulders. So get down to this level and then a rally up to form a right shoulder, which is always worth risk because your stop's above the head, and then look for a breakout to the downside. Dollar Swiss, that was our move lower yesterday. Unlike the other dollar majors, we haven't made a new swing low, but we are seeing quite a decent move to the upside. I'd still look at buying dips in dollar Swiss, but I'd only look at buying dips below sort of here, 88, 89.33, sort of 89.30 area. You've got to remember, if it's risk off, then traders will be buying Swiss francs. So dollar Swiss isn't the best pair to trade because Euro Swiss should move to the downside, and so should sterling Swiss. So although the dollar will move higher, the Swiss will try and move higher as well. So this could just potentially move sideways or lower. It's put it this way, I expect it to be choppy. Dollar yen, I think we've got to look back at this sort of picture. We've retraced to 50%. I think any rallies up, if we get a rally up towards sort of 105.76, it's worth considering short. Again, keeping an eye on stock indices. Dollar CAD is the one that just keeps on going. Obviously, with that strong rise in oil prices, 125.21 is a 261.8% extension level. It might dip below there just on a 127.2% extension from this move, but I think if you're looking at oil, if you're looking at dollar CAD, keep an eye on oil. Keep an eye on Steve's projected flag target or whatever it was, and before trying to trade a long trade from here. Aussie dollar. There was something yesterday. Somebody posting a report about yields and about inflation and about basically about where to stick your money if you're concerned about inflation. And Aussie dollar is the prime candidate, and that is probably why we've seen a really decent move to the upside. But we do look like we're getting a bit of a topping formation, obviously with the dollar potentially turning. Again, if you get a bearish outside day, I'll potentially look at a top being in place, but I think at the moment it's too early to tell. Euro sterling just keeps on breaking patterns. I think we're now heading down to this sort of level, 85.63, 85.34, which is a confluence zone. And euro yen, I don't really know on euro yen. You can see here you've had 3 inside days, which highlights indecision. Yesterday was a perfect doji candle. If you go to the 1 hour chart, there's really not much in the way of sort of formations. If we put a projection on here, and this zone up here becomes a potential sell entry. But at the moment, inside days, choppy price action, I really haven't got a view on it. I would have up here, but not at current levels.
Cool.
That's me done.
Thank you, Ian. Okay, so I can come on to the gun to the head stuff from yesterday, where we call trades live and see how they perform between now and 9 o'clock at night, unless they hit targets or stops beforehand. And I'm pleased to say that we got some big winners yesterday. Steve, you hit target on Bitcoin for a 3-hour return, and Ian, you were 2.78 odds to the good on dollar Swiss at 9 o'clock yesterday. I was stopped on my oil short, but overall, that's some decent R that we've put in the bank. So well done, gents.
Yeah, shame you couldn't join in and help us out.
Oh, I know. Sorry about that.
So obvious that was going up.
Yeah. Right, who's going to go today? I mean, Bitcoin's looking pretty tasty again. I think it's just broken this swing low from yesterday. I must steal in your thunder there, Steve. Go on, Steve.
Yeah,
you
no, just sort of like I want to see an overall view on that sort of bit head gun-to-head challenge, because sort of like there is a little moment.
I haven't updated the league table.
Oh,
you haven't updated it. Thank God.
I have now.
Oh, look at that, second place. I'll be happy if Liverpool would manage that this season.
Yeah, Liverpool ain't getting
it's a whisker, isn't it? It's a whisker.
Yeah.
Yeah, it sort of feels like Grand Canyon at the moment, eh?
I've got to get that back by Friday.
Yeah. I mean, it's all about the pip count, really, in my opinion.
Fuck off. 300th trade.
It would be if you did £1 a point.
Ian's got a trade in hand.
Oh, he has. He's got a game in hand. I forgot about that.
He's got a trade in hand.
Can I have 2 today?
Oh, he's only counted his chickens. Oh, my God. Does that mean I can't do anything today?
No.
I wonder if I'll go further ahead if I don't do anything. Yeah, I've already missed my. I've already missed my chance. I wanted to sell Bitcoin and it's collapsed since you've been speaking.
Oh, I don't want to do that.
It's broke that sort of flash crash low that we had yesterday around about 2 o'clock yesterday. It sort of dumped, didn't it, and then recovered straight away. A little bit below that.
I mean, I still think. Well, put it this way, can't really think of anything. Where's my stop for this one? Really needs to be up there.
Yeah, Steve's going to give back 1 hour here.
What are you doing? Having another go at it?
Now, 47,000. 47,000.
Okay, so what price are you taking now? 46,950?
I'm targeting.
Fucking hell, it's going.
47,000. I'm targeting.
It loves it. Oh, crumpet.
Let's target. We need a 4-hour chart.
Bit of crumpet.
Bit of crumpet. Just walked to your room, eh?
Yeah, lovely.
Hello, Tracy. Right, I'm going to target 38,000. How about that? 38,000.
How about that, indeed?
So there's my target, 38,000 within maybe a couple of hours. How does
you started talking about it when it was at 46,950. Well, it's above that now. What price are you going with?
Stop at 48,500. Give it a little bit of room.
Holy smoke.
Getting short of 47,000. Stop at 48,500. It's target of 38,000. I'm just trying to think of what could stop this sell-off. There'd be a bit of panic coming out.
Elon Musk could just send a tweet.
No, but he's already sent a tweet that it's overpriced. So
are we being spammed on our chat?
He might say, it's undervalued now though.
No, he won't. He'll wait till it gets to a value that I've probably called, and then sort of say it's undervalued. Load a few more up. I mean, he doesn't. You know, he can do what he wants. There you go. There's my trade. Come on.
Lovely. Good luck,
you guys.
What, before you get stopped out, Ian? What have you got?
Move on.
Gold. I think inflation.
You're buying it? Yeah.
I think we go up here. This is previous swing low, high, 1855. Steve said. I think this is forming quite a nice little Elliott wave pattern. Impulsive move to the upside. Blah 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 blah. So getting long, 108.0786. Targeting 1842. I don't mess around with silly numbers. Get rid of that. So long of gold, 108.07. Stop 1798, targeting 1842, 3.4R. Hopefully Steve's been stopped out by now.
Probably by the time Joe finishes talking.
Does that mean you get another go if we're still on the air?
No.
Oh, I get 2 goes, don't I?
No.
Yeah, you can have 2 goes, eh?
No.
2 goes, catch up. Actually, you've played more.
You're off on Wednesday, aren't you? What?
It is Wednesday.
You played more. No, I'll get up Wednesday.
Played more because I've got a better work ethic than you two and turn up.
Isn't it Wednesday today?
You've played more games. No wonder you're a lot further ahead.
There must have been a good reason for me not to be here.
I think it probably was. I think
it was.
Come on, Joe.
I can't find anything.
Gold.
You two have taken all the
I'm on
good
side.
stuff.
One side.
Shall I go with one of the indices?
What about Aussie Swiss?
No.
What?
Okay, let's go with FTSE.
Oh no, not FTSE.
Yeah. Corrective channel. Had a little bit of a poke above earlier. Rejected.
Sounds like the story of my life, that.
Quite a big stop. Okay, selling this at 66.13. Stop at 66.81, and I'm going to
1-to-1 risk
target.
reward. Nice.
No, I'm not finished yet. Down to these swing lows down here, 63.05. So what we're looking at, 4.5R. That would complete that head and shoulders, wouldn't it? Yeah.
Cool.
So down to the
what are you looking
potential head and shoulders neckline. This one.
Oh, right.
Yeah, if it closed below there.
I've got it now.
If it closed below there, then we're away. What's the target on that?
Go on, go for that instead.
About 800 points lower. It's 5,500.
5,650. 14R.
Have it.
Lovely.
Why not? There we go. That's my trade of the day, selling FTSE. Okay, anything news-wise that's coming out today that we need to be across?
Not really. It's not about news, is it?
Eurozone CPI and US consumer confidence data at 3 o'clock. We've also got Fed Chair Jerome Powell providing testimony in front of the Senate Banking Committee. So a few bits to keep an eye out for.
Governor BOC, Bank of Canada's governor, is speaking at 5:30.
Right,
Fed Chair. Did you say Fed Chair's Powell?
Yes.
That later. Yeah.
Yeah. What time? Have you got a time on that?
Yeah, 3 o'clock.
Okay, lovely. So that'll be out at the same time as the US consumer
loads
confidence.
of and New Zealand interest rate decision overnight. RBNZ.
Okay. Lovely. Right. Well, let's wrap it up there then, shall we, gents?
Indeedy.
Yeah, lovely.
Good. Have a cracking day and see you tomorrow.
Yeah, enjoy that. Cheers.
Bye-bye.